Welcome back to my YouTube channel. And this is Mumbua, your future CFO. So in today's video, we want to be looking at a trial balance. And we know from our previous videos that a trial balance is a summation of the GL balances at the end of the period, maybe at the end of the month or at the end of the operation cycle of the organization. So basically that is what we want to be looking. We're going to go through a trial balance, and we know a trial balance needs to be balanced. The totals of the debits and the credits should be the same. Also, we know for you to get a trial balance, you start from journal entries. And if you haven't watched my video on journal entries, you need to do so. You need to learn about dealer. It's all well explained. Which accounts you debit, which accounts you credit. So we start from journals, post this transaction is into GL accounts. Then at the end of the period, at the end of the month, at the end of the trading period, we get our trial balance, which is a summation of the balances, the closing position of each GL account. So with that said, let's dive in. So we're going to be looking at a trial balance, which then we do some three adjustments. So this is our trial balance, and we're going to be doing our adjustments in these two lines. Let me just use a color so that it's easier to tell what is happening. So those are the two lines we're going to be doing our adjustments. So the first one is we paid creditors via check through Chase Bank. So Chase Bank has a debit balance. It's a bank. So we're going to be crediting. So to make that adjustment, we credit our bank to reduce the bank balance. Then our creditors are down here. So we are reducing, so we debit. And for the purpose of this transaction, you need to remember our dealer, where we debit dividends, expenses, and assets. We credit liabilities, equity, and revenue to increase them. So if we are reducing, we do the opposite, like what we've done with the first transaction, because we are reducing the balance. The bank balance is going down. Our creditors balance is going down because we are paying. The second one is we paid rent. So our rent expense is gonna go up. So rent going up is a debit. So we're gonna debit our rent account, and we pay this through Chase Bank. Sorry, it's 15,000. And we paid this through Chase Bank. So Chase Bank is going down again. Another 15,000. So this is gonna be 10 plus 15, 25. So that is posted. But our third transaction is we paid cash to our debtors 12,000 through Bank of America. Our Bank of America is going down 12,000, and our debtors, we received check. So we received check, we received cash. So our Bank of America is going up. It's money coming in, so it's increasing. So we debit because it's increasing. So we debit, and this was our debtors. So our debtors gonna go down by 12,000. And basically we've adjusted all our transactions. So we've adjusted all our three transactions, and these are our ending balances. So this was the position on 30th of December. We've adjusted some transactions that happened a day before the end of the month. So this is our closing position, which shows that our Chase Bank balance is $20,000, Bank of America 52, accounts receivable 118, inventory 55, our sales revenue 80%, rent 15,000, salaries 20, accounts payable 80, bank loan 60, shareholders 40, and retained earnings 80. And our debits and our credits are the same. It's a good sign for a trial balance, but it's also important that you need to go through each GL account. It is very important to go through the GL account because sometimes maybe you've double posted. You trial balance with balance. So it's good to go through the GL account and check each account one by one. So basically that is what I had for you in this video. A reminder of our dealer and adjusting transactions in an adjusted trial balance. So I hope you've learned something new from my video today. Thank you for staying with me all the way to the end. You're just the best. Be blessed.